All right, we're live. So first and foremost, let's get a couple of housekeeping items out of the way. If you are here to get fake analysis, you're in the wrong place. Click off of the video. If you're here for institutional analysis, real institutional analysis, not like, I'm going to give you institutional analysis and then I'm about to pop up a bear flag on the screen, then you're in the right place, because bear flags, bull flags, all that stuff, it doesn't work. We all know it's not an edge. That's why you're here, because you're tired of people throwing that in your face with low probabilities. And you're looking to hear from a person that has a much higher probability setup and a little bit better of a result, right? Proven over months and months and months and years and years, okay? Now, there's one thing in the market. Again, I say this all the time. I'm going to continue saying it every single stream. There's one thing in the market that matters, and it's not a bull flag, it's not a bear flag, it's not a trend line, it's none of that stuff, okay? It's volume and the velocity that volume comes in. Every single day, volume comes into the market. 95% of that volume comes in from institutions. 5% of that volume comes in from guys like us, gals like you, people that have, smaller accounts called retail traders, okay? 95% of the volume that's pushed inside of the market is pushed by institutions, by banks, by hedge funds, and their algorithms. And guess what they trade based off of? Mathematics. Mathematics. Algorithmic mathematics, okay? Quantitative mathematics. So if your analysis and your strategy, or just whatever you want to call it, if it doesn't include mathematics in some way, you're always going to lose. You are literally always going to lose, okay? I'm going to teach you the mathematics. I'm going to show you how to automate the mathematics, and I'm going to give you the real levels. Bitcoin, gold, silver, S&P, NASDAQ, and I'm wondering, who's going to throw me for a loop? Who's going to throw old Drew for a loop today and give him some obscure asset that they think the methodology, that the indicators are not going to work on? Drop them in the comment section. Whatever you want to see analysis on, drop it in the comment section. I just told you what we're going to do, guaranteed. Gold, silver, Bitcoin, S&P, NASDAQ, no problem. You want to see more than that? You let me know. I'm going to show you why the NASDAQ is rejecting where it's at, why the S&P is rejecting where it's at, why silver has pumped to where it is, and why gold has pumped to where it is. And I'm even going to show you the trades that we took and had set up previously at all of these levels, because these levels legitimately and literally work, okay? So if you want to see something, drop it in the comments section. I challenge you, seriously, give me something that you think is going to throw me for a loop, something I could not have possibly prepared for. And we're doing all this live. Again, this is all live analysis. This isn't, pre-recorded, nonsensical stuff. We're not talking about trend lines and I'll show you the market structure without a trend line. And it's way easier than a trend line, okay? I don't need trend lines, and neither do you. And I'm going to show you why. I don't need a trend line on my chart. Notice there's 0 trend lines on my chart, right? There are 0 trend lines on my chart. Why are there 0 trend lines on your chart, Drew? Let me show you. Because I already have the trends, okay? I already have the trends on every single chart and time frame right here. I know that on the 1 minute, the 5 minute, the 15 minute, the 1 hour, the 12 hour, the week, and the month, we are in an uptrend. My trend status box shows me that in literally 5 seconds. I know that on the 30 minute, the 4 hour, and the daily chart, we're in a downtrend. This is just on gold, okay? I know that. I don't need a friggin' trend line that's like, oh, are we going to bounce from here? Are we going to bounce from here? Notice why the trend lines don't work. I'm not saying that they don't work. I'm not saying that they don't bounce sometimes, but I'm going to show you the real reason why they bounce and not the fake reason why they bounce. So let's just draw a trend line, right? Look, actually, you wouldn't have even caught this if you would have had this trend line. You wouldn't have even caught it. Why wouldn't I have caught it, Drew? Well, I'm about to show you. Why would I not have caught this? Let's paint it green. I don't know. Why wouldn't you have caught this? Well, if you drew it from here to here, right? Okay, maybe you caught it here. Maybe you caught it a little bit here. But why didn't you catch it all the way through here? You missed that entire trend, man, on gold. If you just had a friggin' trend line on the 1 hour chart, You missed the whole freaking trend. Why? Because the trend line doesn't matter. It's not what actually moves the markets. What actually moves the markets is the volume. And that's what order block suite shows you. Now, and I get it, like what I'm explaining to you and what I'm showing you, like tracking institutional volume and the velocity that it comes in and the mathematics behind it and why those levels matter. I get it. It's confusing. It seems like it's going to take forever to master. You got to do the calculations. No, you don't. You don't have to do any of it. I literally used to do trend lines on my channel. I used to give people bull flags and bear flags and head and shoulders patterns and cup and handles and all that stuff. Why? Because I knew that's what people understood. But until I could give them the ability to actually like automate and see from a broad levels perspective, the bigger picture on their charts within seconds, like you can with a trend line, like you draw a trend line, it takes you 5 seconds, right? Well, now you have the entire institutional footprint and everything that you need to know on your chart within seconds. Okay. So just, call it what it is, man. That's why now I have given you the ability and found the ability to automate it through these indicators, order blocks, alpha structure, right? Alpha structure is what shows you the trend of every single market. And then it even plots the highs and lows on your chart for you right here. You can see them all, right? Those are all your highs and lows. Then it shows you the fake outs, right? The swing failure patterns, right? That called the bottom multiple times on this way up. Then alpha structure, let's get this trend line off of the chart. Alpha structure, or not alpha structure, my bad, order blocks shows you exactly where the institutional footprints are going to be, okay? So if you would have caught this trend, right, you would not have gotten it, right? We know that, but you would have caught it right here. Why? Because you knew where the order blocks were. You would have caught it right here because you knew where the order blocks were. You would have caught it right here, because you knew where the order blocks were, man. That's all that matters. These trend lines, these people that are spitting you this stuff, it doesn't matter, okay? So this is exactly why gold bounced here, dude. I'm just being honest with people, okay? We hit this long. Boom. We called that out ahead of time. We called this out on the 10th of August. That was a week ago. This hit on the 13th, 3 days later. We were watching this level, right? Very simple. This swing failure pattern happened up here with a bearish divergence. Boom, you take the short. And all you have to do is have the indicators showing you all this stuff, okay? Now, why does all of this matter? Well, I'm going to show you. On gold, this is your next level of resistance, $4,528 to about 45, call it 45.40, okay? Once you get up above 45.40, you're coming to about $5,000. You were able to catch the trend here. You were able to catch the trend here. You were able to catch the trend here. You were able to catch the trend here, here, right? And even the entire and perfect bottom down here where your 3 swing failure patterns were happening right at the order block set, okay? So I'm going to tell you and I'm going to teach you just really quickly, what is an order block? I'm going to show you what this means here in a second too. All an order block is, because it sounds confusing. I get it. It's support and resistance, man. It's literally support and resistance. It's supply and demand. That's all it is. That's literally it. The market structure, all it is, it's just telling you the trend across different time frames and then referencing each different time frame to see if the time frames agree. For example, on gold right now, the monthly and the weekly time frames agree. They're both in an uptrend. Then they agree with the 12-hour, the 1 hour, the 15-minute, the 5-minute. They're all in uptrends. And then the daily chart, the 4-hour, and I think it's the 30-minute. Yeah, the 30-minute, they all agree it's in a downtrend. This is what keeps you from trading against the trend and being able to catch the trend. And then order blocks is what's going to actually get you in on the move, right? Because alpha structure, which is market structure, that indicator is going to tell you what time frames are in what trends, right? Now, if you don't want to trade against the long-term time frame and the short-term time frame is switching to an uptrend, say for example on gold like it is now, then how do I get in, right? Well, that's where the order blocks come in. All an order block is supply and demand. It's telling you where volume from institutions came in at a velocity that is mathematically significant. That's it. And you don't have to do the math at all. The indicators do the math for you, okay? And then they just plot it on your charts, and it's little boxes. I'll show you, right? I mean, you've seen it a million times, I'm sure, but I'll show you. It's just these little boxes on your chart, and whenever we enter those boxes, you see the reactions, man. You see the reactions. You see the reactions, right? So, and look, we even came down into this box. Boom, we bumped up to this one. We came here, and now you see the reaction, right? So all an order block is telling you, and I'm going to show you exactly what this looks like here in just a second, all right, is it's telling you supply and demand. It's telling you where support and resistance is. It's telling you where there is significant buying and selling in the market, okay? So let's go to, say, the 30-minute chart. And I'm going to show you an example of an order block and why it statistically is so significant. Okay, so give the indicators 5 seconds to pop up because, again, it's doing mathematical calculations in the background. I'm going to show you what this order block looks like. Okay, so here's your 30-minute, right? Let's go right here. We'll just zoom in. We'll just zoom hella far in, man. Let me just zoom really, really, really friggin' far in. This is stuff that, like, people charge you thousands of dollars to know this. I'm charging you nothing, okay? This is an order block right here. You had a nice, significant down pink candle, okay? This is opposing the move, okay? The trend is up here, right? But you got this one last ditch effort pink candle downwards, right? Top to bottom. Then this big blue candle right here. That is called a displacement candle. That candle, all it did was displace price away from the top end and bottom end of its established range. Boom, displaced. Price got displaced, right? Why is that statistically significant? Because in order for big volume to come in and big candles like this to come in, what that's telling you is that institutions were running people's stops right here to then buy. Okay, they are in a buying mood. They are in a buying mode. So what they did was they ripped price back up. Now, why is this statistically significant? Because it is massive volume that came in here, first and foremost, right? Secondarily, when you come back down into that order block, as you can see right here, right? Look what happens. Boom. Could you have taken a trade there? Hell yeah. Would that trade have been profitable? Hell yeah. Where's my media assets, bro? Where's my banana bread guy? Where's banana bread guy?
Dude, I got some banana bread at work today, dude. Hell yeah.
Hell yeah. Oh, hell yeah, man. These would have been profitable trades. I mean, I think we can all see that, right? And we'll zoom out a little bit more and we'll see the reactions again. So you got your reaction. This is where institutions are just adding to their position that they were building over here. That's all an order block is. It's just showing you they're demanding price. They are literally buying, okay? Then they bought here, boom, price went up. That's all they're doing, okay? That's it. That's all this means. It's literally it. It's supply and demand. It's institutional supply and demand. That's order blocks 101, okay? Market structure 101. We did that as well. So in any case, we're going to get to the analysis. I'm going to show you the supports and resistances for gold, silver, the S&P, Bitcoin, NASDAQ, anything that you want to drop in the comment section. Please, for the love of God, somebody drop something in the comment section. We got like 24 people across all platforms here. Somebody drop something in the comment section for me and give me an asset. Give me an asset to chart. Put me to the test. Okay, we're going to go ahead. We're going to do gold first. All right. And let me know if that explanation of order blocks makes sense. Okay. Does that explanation of order blocks make sense? Do you understand why order blocks are statistically significant now? And those order blocks, guess what they also have attached to them? What's called a fair value gap. You can come right down into that fair value gap. In my opinion, I think fair value gap is a dumb name. I think it's called a displacement gap, but whatever. People understand fair value gap. I'm just going to use the commonly known term, fair value gap, FVG, right? It's a displacement zone, but we'll call it what everybody wants to call it, okay? Now, let's talk about gold. So gold came down, and we were talking about this support on Friday, right? All we have to do is uphold this support, okay? It upheld this back on Thursday, all right? It has not come back down to retest it, and it's just legging up, okay? What do I mean by legging up? Well, it came up, it created order blocks, it tagged back into it, now it's legging up from that next order block set. Look at it. I mean, it's very simple to see, right? You had a nice move up, then you got your big displacement move up, you came back down, you tested the order blocks, and now you're moving up. It's that simple. It's that simple. All these people make this stuff so frigging hard. Dude, it is literally that simple. And here's your entry and exit criteria. Again, as simple as it can possibly be. I will show you. You enter at the top end of the order block, your stop is placed outside of the bottom end of the order block, and then you are targeting the next order block set up. So let's zoom out. I'll show you where the next order block sets up or the previous highs, right? So just hold on. Let the indicators indicate, right? Let them do their calculations in the background. Boom, right there. This is literally your trade. It's that simple, okay? It's literally that simple. That is a 4x risk to reward trade just based off of one little thing. Hey, we touched the top end of the order block. I'm placing my stop outside of the bottom of the order block and the 1 hour lows, which is the chart time frame that we're on, the lows, right? Very simple, cut and dry entry and exit criteria. It doesn't get much simpler than that, okay? It truly doesn't. It truly doesn't. I'll give you other trading strategies as well. And as soon as you come in to subscribe to the indicators, which again, you can try for literally $7 for a week. Try them for $7. If you can't make $7, I don't know what to tell you, dude, because you're going to literally have access to 5 different trading strategies right off of the bat. Multiple trainings on all indicators. They're like 5-minute trainings too, dude, and you're going to understand everything. And then you're going to have full tutorial videos on every setting and how you can use it inside of this indicator if you want to, but they work perfectly straight out of the box as soon as you put them on your chart. You just got to make sure your chart's on like dark background, okay? Now, where is our next resistance? Resistance is right here, 45.40, okay? When you get above that, let me show you where we're going, my friends, because it's pretty nutty. Zoom it out. See how fast they load? Like it does not take forever. It really doesn't. Give it 1 second for it to get up here. Boom, look at that. Dude, you're coming to around 5 thou wow, baby. You're coming to around 5 thou wow. That's where your next resistances are. You've got 45.50 right here, okay? Then you've got these 2 order blocks, a 15-minute and a 2-hour order block. That's going to serve as resistance. I totally get it, right? You've got this one. It's got small volume on it, 6.6K. Okay, this one's got 6.8K in total cumulative volume, meaning that there were 6,800 contracts that traded at this exact price, right? Now, what does that mean for this one? 14,000 in volume on this 4-hour, okay? That's good volume, okay? It costs roughly, I think it's like $7,500 or something like that on GC1. On the gold futures, it's probably more than that, but we'll just say 7,500. Times that by 14,600. It's $109 million in volume for them to hold all of these contracts that they shorted here overnight. That's going to be significant and statistically relevant resistance, okay? Before that, you're going to come to about $4,900. That's where your 4-hour highs are, and that is all you need to do is close a candle above this, right? And obviously, you know, you've got a little bit of resistance there, right? 26,000 in volume. That's why I'm saying 5,000 is your like really, really significant target, okay? This is 26,000 in volume right here in contracts. If you close a 4-hour candle above this line right here, your 4-hour now changes to an uptrend. And now all of these trends from the 12-hour down will align. And the only thing that's still in a downtrend is the daily chart. And then gold's going to be going on a very, very significant run. Once it gets above this level, boom, guess where it's coming? $5,500, baby. So ultimately, what do we need to do? Well, we need to uphold these 2 levels. I'm going to show you the 2 levels that gold needs to uphold, and then we're going to move on to silver, and we're going to see what people want to do. Can you do RHM, Rheinmetall. Yeah, we'll do it, man. Never heard of it, but we'll do it for sure. This is what I'm talking about, guys. This stuff right here. Nemus 2934 is giving me an obscure asset I've never heard of. He's putting us to the test, okay? More people need to put us to the test in the comments section. Drop what you want to see. BTC next. We'll do BTC next. We'll skip silver for now. Hey, Drew from the Czech Republic. Does it also work for spot prices like XAU USD? Dude, I'm going to blow your mind. I'm going to blow your mind. Let me do one thing really quick. But the spoiler to that, yes, it does. It works, okay? These indicators, don't trust me. Actually, go try them. Don't trust me. Don't trust me. I don't want you to believe me. It works on every asset. It works on every time frame. It works on every different chart, and it works for every trader type, whether you're a scalper or an investor, right? Or a day trader or a swing trader, doesn't matter. And it works for every single trading strategy. You trade SMC, fine. You trade ICT, it works. You trade friggin' support and resistance, it works. You trade VWAP, you trade points of control, you trade volume profiles, does not matter, it works. You're a trend trading, try to catch the trend trader. You're a reversal trader, it works. Works for literally everything. There's one reason Matoush. There's one reason why this works for every asset, every time frame, every trader, every strategy, period. Because every market is the same. And what do I mean by every market is the same? Every market is driven by but one thing, institutional volume. That's it. The only thing that matters. So if you can crack the code to institutional volume and understand where it's placed and the positioning that they're taking, you have cracked the code to the entire market, but you don't have to do that. We already did it for you. So here, all you got to do, get these on your chart. So in any case, all we have to do here for gold, to be honest with you, let's zoom in on the 1 hour chart. Let's let the indicators indicate real quick. Let them do their calculations in the background. Let's zoom out just a little bit. All we have to do is uphold this level right here. This is it. We uphold this level, we are in great shape. So long as we don't go below 43.52 on gold, gold is in great shape. Now, with one caveat, I want to uphold this level, okay? I want to uphold 44.19. That keeps all of these trends intact and then starts pushing us up towards the 4 hour highs, okay? So as long as we can uphold the 1 hour lows here at 44.22, we are in great shape on gold. Let's move to Bitcoin. Bitcoin doing exactly what we thought Bitcoin was going to do. Okay, we actually called this trade out 3 times. We were able to take this trade. We took this trade back here, bang, right? We took this trade right here, bang, right? Actually 4 times now. Could take this trade right here, bang, and then take the trade again right here, bang, and guess what? Let's get this off of here. If you were one of the lucky souls that entered either here or here, right? Where did it go? Straight to the next order block up. I cannot make this up. It's just how the markets work, man. You're probably going to get resistance here, is what I always say. When you see these big order blocks, you are going to see some resistance here. And just like right down here, you are going to see some support here, okay? That's just how it is, okay? Now, if you get the perfect trade setup, which is the swing failure pattern, it's literally just a triangle pointing up, telling you to long, inside of a box. That's the easiest strategy in the world. And if you have a bullish divergence happening, when that is happening, dude, it's like an 80% probability that it's going to play out in your favor. Now, in any case, what do we have to do on Bitcoin? Dude, you got to smash through this 2 hour order block right here. It's only got 2,000 in contract volume on it. I don't think it's going to be a huge resistance. Okay. I'm just being honest, right? I do not see it as being a huge resistance. We really needed to uphold this level right here, which was 62.4. It's more, it's like $62,200. We did that. Okay. And it bounced, boom and boom. So what do you have to do now? You got to break this resistance down, right? Even when you break that resistance down, here's the issue. You're coming into another massive set of resistance right here. Not huge resistance, 4,000 in contract volume here. But if you think about it, in order to hold this overnight, where's my calculator? In order to hold this overnight, it costs about, I think it's like $1,500. 6 million in volume right there. Not a huge amount of volume. So these are not going to be hard to push through. Okay. But excuse me. Let's show you what else is going to happen here. Okay. So in my opinion, you stay above 62.2, Bitcoin is going to start becoming bullish. Okay. Now, the one thing that will stop that from happening, S&P rolls over, NQ rolls over. If that happens, Bitcoin's probably going to roll over as well. Now, once you get through 64.6, which we were talking about this level last week, guess where you're coming? 66.5 to about $68,000, 67.5, right? That's where you're coming. So you break this level down, dude, it's almost like written in the stars that you're coming up here. You're coming for the 1 hour highs at 67.1. You're coming for the 4 hour highs at 67.6. And then you're going to flip all of these to uptrends. And then you're going to start having to try to bang down the 12 hour, the daily, the weekly, and the monthly, because the 12 hour daily, weekly, and monthly charts on Bitcoin so far right now are still in a downtrend. So this could actually turn out to be an absolutely monster trade for you. Again, you know, we give those trades out elsewhere, but we did give that trade out in advance, and you've been able to rip this thing like 3-4 different times. Absolutely insane. If you're paying attention. If you're not, you didn't. You know, it is what it is. But why don't I think that this is a massive resistance here? Okay, and I'm going to explain to you a concept that you're going to need to get familiar with. Okay, it's called mitigation. Okay, mitigation just means how far into this order block did we get? That's it. All that means, okay? What is an order block? An order block is essentially an institutional block of orders, and there's only so much liquidity in it, okay? And inside of that, you will see, let me show you. Inside of that confluence bubble right here, boom, you will see that this only has 960 in cumulative volume on it. So it's not a lot of contracts holding you down here, but 84% of that order block has already been mitigated, which means back here, as you can see from this candle right here, right? It went 84% of the way into that order block. So on that second touch, is this as likely to hold up if they've already taken 84% of the institutional orders liquidity that was there? No. It's not as likely to hold up. Will it still hold up? Yeah, probably. If you come up here, you'll probably get a small rejection and then move through it, is my point. So can you get a scalp here? Absolutely. Can you use it as a profit target to take profits? Absolutely. Would you use it as a reversal point? No, you would not. Why? Because it's already got 84% of the liquidity has been taken from it, okay? And that's just a lesson that you have to learn. So that's what's happening here, right? And let me show you this in real time. That's exactly what's happening here. On this order block, we hit it back here. Now we're hitting it a second time, and guess what? We came further in to that order block. All right, let these things zoom in just a little bit. Boom. As you can see, this is where we hit last. Now you can see we've hit again even further, and now we're trying to move our way up through it. So the more that these get tapped on, the less liquidity and orders are going to be in it, because they've already taken some of the orders over here. They've taken some of the orders here, and then there's really only this left, right? So that's why. So whenever I'm saying, hey, we're probably going to go to 66.5K to about 67.5K, which is right around here, right? This is why. Because you got your 1 hour highs, you got your 4 hour highs, and you got your order blocks up there, okay? You're going to get a little bit of resistance here, but not much, okay? That's why. So you crack through 64.6, you're most likely to come up into this nice little range, $1,000, right? This would be a big trade for you too. This would be a huge, huge pump up, okay? So again, I think all we have to do is uphold 62.2. If I am looking to keep the trend going, all I want to see is us uphold $63,300. That is literally it. That's all it takes for Bitcoin to continue moving up here, and it needs to crack down these two levels. It just needs to get up above 64.6 without losing that level right there. 5-minute, 15-minute lows at 63.3. That's it. And Bitcoin continues to move up. Now, let's talk about silver. Silver, we actually crushed it on a million times, right? We had the double SFP back here. Well, it was actually a triple SFP, but this called the exact bottom on silver, okay? This double SFP right here, and we had what is called a bullish divergence. Now, for the bullish divergence, all you got to do is you got to have RSI on your chart, and then we'll zoom in a little bit, and I'll show you what we're talking about. You see how the lows on see how the lows on RSI were trending down, right? Right here, down, down, down. And then the that's on price, but the lows on RSI were staying stagnant. All right, well, let me show you. This is where it comes into like the real nuanced details. This is the low that SFP'd, and then this low SFP'd right after that. This is the low from the first SFP, and this is the low on RSI from the second one. That is a bullish divergence, okay? Price is making lower lows and RSI is making higher lows in the same time frame. That's all it is. So that is how this right here called the bottom on silver, and you were able to get in on that move. Now, that's not the only time you could have gotten in on this move, right? It really and truly isn't. You could have gotten in on this move right here, where this candle tagged into that order block, right? Could have gotten in on the move right here where this candle tagged into the order block. You could have gotten in on right here when these candles tagged into the order block. The one thing that institutions cannot hide, my friends, is volume. They're telling you where they're positioning, and the indicators are telling you where they're positioned because they're actually calculating the mathematical data that shows you that. If you were to draw these order blocks by yourself, dude, this is why I never talked about them previously, because it was too burdensome of a task to tell people like, hey, make sure you draw these on 8 different time frames all at the same time. You need to draw these on the 15-minute, the 30-minute, the 45-minute, the 1 hour, the 2 hour, the 4 hour, the 10-minute, and the 8 hour chart. What? No, dude, I don't have time. I can't do that because now I can only afford to watch one asset. Okay. Well, now with the invention of the indicators, it does all of that for you, and it gives you all of those setups. Okay. Now let's zoom out on silver real quick. I'll zoom in a little bit. 70 to 74 bucks. That's where silver's going. Okay. That's where silver's going. All right. Where are you going to receive your first resistance? Right here at about $69 up to $69.85. So 69 to 70 bucks. That's your first resistance. That's your next level you got to get through. You just got to crack these 1 hour highs. Boom. All of these chart time frames from the 1 minute to the 4 hour are in an uptrend. Once you crack this, right? Boom. And then you're just going to receive resistance here at about $69 to $70. Okay. Second to that, this is where your massive resistance is going to be on silver. Your massive resistance is going to be at this 10 order block set. Why do I know that? Because there's 80,000 in contract volume at that order block set. Let me show you what that means. Because it costs about $20,000 to hold one of these contracts overnight. $1.6 billion in short volume, anybody? Does that sound like a lot of institutional volume? Absolutely it does. It is going to be hard to get above $74 right now, okay? It's going to be easy to get up to about 70 bucks, but once you enter this 10 order block set right here, this is the resistance of resistances, right? For my French people out there, you're going to get a rejection here, period, no matter what. You're probably going to get a rejection here, I'm going to be honest with you, no matter what. Why? Because you're going to make a massive move from here to about 70 bucks. I mean, that's a $4 move in price, right? $4 on a $66 asset, that is a 6% move. You're going to run into resistance here. You're going to get a pullback. Then you're going to have to start making your way up through boom, 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 boom. It's going to take you a while to get through 74 bucks. But once you get through 74 bucks, dude, you are cruising and you are cooking with jet fuel. Okay. Now, obviously, if you got in down here, dude, you absolutely crushed it. Like there were multiple times where Alpha Intelligence called the bottom on this. Okay. We called the bottom on this. Well, we didn't. I can't take credit. Alpha Intelligence's indicators called the bottom on this, right? Called the bottom right here. You had the nice swing failure pattern, but you tagged right into the order blocks whenever you got the displacement move, right? You literally tagged right into the order blocks and then you just started moving up, moving up, moving up, right? And then let's say you didn't get in here. That's perfectly fine. You didn't catch the ultimate bottom here, right? You didn't catch the bottom here. You didn't catch it here. Who cares? The order block came in and guess what happened? You got dual swing failure patterns right above that order block into what is called what most people call it, the fair value gap that's above that order block, right? So you had another opportunity to get in just based on the indicators with this SFP right here. Boom, you pushed up big, big money, right? Second to that, you got your perfect setup, okay? Which was this one right here. You got the triangle inside of the box. That is the swing failure pattern, and that called the absolute bottom and called the bottom of the run and the reversal, period. This is where it was hinting like, hey, we might be turning around here. This is where it confirmed. It confirmed right there. And guess what? Massive, massive bullish divergence. Look at these lows getting lower, right? Why did I use a line? I don't know why I did that. Lows are getting lower, right? I think we can see that. And then lows on RSI are getting higher. I think we can see that, right? That called the bottom on silver, period. Just is what it is. Then you got the same thing that happened right up here. Bang, bang. You got the double SFP, bullish divergence, boom, called the bottom. So in any case, what do we need to do? In my opinion, all we got to do is uphold $63.62. Ultimately, I would like to uphold this area right here, 63.85 on silver. But if we don't, it's no big deal. Look at all the support you have here, though. You're literally all the way down to 63.85 is support. So the likelihood of you moving through this quickly is very unlikely. You have 4,500 contracts on those order blocks. You have 700 on these order blocks. You have 1.6K on these order blocks. It's about, call it 8,000, 7,000 in contract volume, right? That's substantial volume still, right? $140 million worth of capital tied up here as support. So you're just going to have to watch out for that, right? At the end of the day, that's it. That's all it comes down to. Uphold 63.88, okay? Let's talk about the S&P. Actually, let's talk about NASDAQ first. I like NASDAQ. All right. This was your perfect trade that we always talk about. When the triangle comes in inside of the box and you get the divergence, it is the perfect trade. It always hits. It is awesome. It is literally one of the easiest setups you're ever going to see. Free indicator RSI. All you have to do is have alpha structure, order block suite popped up. You see the triangle pop up inside of the box with RSI divergence. Bang. It's that simple. On NQ, it literally and truly is that simple, okay? Look what happened. You came right down into the order blocks fair value gap, and look what happened. Guess where you went? Right up to the next set of order blocks. Right up to the next set of order blocks, and then you faked out, you swing failed, and boom, you have a profitable trade. And now, guess what? You are under pretty decent resistance, okay? So that's really what's going on the NASDAQ right now. What do you need to see happen if you want the NASDAQ to move up? To be honest with you, you got to break above here. You got to break above 30,386. And honestly, you're going to have to break higher than that. You really need to break up above 30,677. We'll zoom out and I'll show you why. Dude, honestly, you ain't going up. I'm just being real with you. I'm just being real with you. Let the indicators load. Boom. We ain't going up. We're not going up, okay? It's going to take a lot for us to go up here. You got to get through this first order block set, which is right here, right? Then you got to get through this second order block set, which is right here. Then you got to get through this one all the way up to 30,988, which is the all-time highs, dude. You ain't doing that anytime soon. I'm going to show you why. This first order block set, it's probably not going to be that big of a deal now that you've rejected from it at least once, right? It's got 165,000 in contract volume on it. That's statistically significant volume. I would be watching this level. But look at this one. 425,000 contracts worth of shorts came in from $3,477 to $3,677. $30,677. So in a $200 price range, 425,000 in shorts contracts on the NASDAQ E-mini futures came in as shorts. I'm going to give you about 2 seconds to mull that over in your head and try to guess how much friggin' volume that is. But dude, it's insane. Let me light my cigar. So now that you've wrapped your head around how much volume that is, look at this one. 1.2 million in short volume on this 4-order block set. Do you have any idea how many contracts that is on MNQ on NASDAQ? That is insane, okay? So my guess is you ain't going to be getting above 30,400 like anytime soon, okay? And what do you need to do? Well, honestly, this is what I see happening. You're going to come up here, you're going to reject, right? Or you somehow get through this one, you reject from this one, and then you start breaking the market structure down on the 1 hour and 4 hour charts. Here's the 1 hour lows, and then here's the 4 hour lows. Now, the good news is that you have a massive resist or support level below us right here that has 820,000 in cumulative contract volume. So if you're going to uphold any level, it's going to be right here, and it's going to be at these 4 hour and 12 hour lows. Okay. So my guess, you come down here, you catch a bounce, right? You come up, there's some order blocks that get made on the move down. You reject from those order blocks. And then as soon as you lose $29,800, you're coming down to about 29.4, period. Like fast. There's no support in between here and there that's actually going to uphold anything for you until you get down here, man. Just is what it is. So, you know, do with that information what you will, but I'm just going to be honest with you. It ain't looking good until you get down to about 29.4. And if you lose that level, you lose this level right here, 29.2, dude, it gets nasty. Okay. It gets real nasty because this isn't going to be much in terms of support. If this can't hold up 800,000 in contract volume, then 115,000 here ain't going to be that great. And then you've got this last ditch effort right here at 232,000 contract volume. Otherwise, you're coming down to the daily lows all the way down at 27.3. There could be a massive, massive downward move on the NASDAQ, and there is a crap ton of resistance above us that might make that move happen. It makes more sense for it to come down here than it does for it to come up here. You see what I'm saying? So take that information and do with it what you will. But yeah, dude, this thing it's ready to go. Okay. And then second to that, the S&P, I'll show you, why it rejected here, but if the NASDAQ goes, the S&P is going to go. So these were our old 1 hour highs. Okay. And lows. I'm going to show you. Our old 1 hour highs were right here. And then our new 1 hour lows were right here. Okay. So what I have whenever we're at all-time highs, when I see these highs come in and the new lows come in, I have this proprietary method where I can predict where, and it's not perfect. Obviously nothing is perfect, right? But I do have this proprietary method where I can predict where you're going to receive resistance once you crack the all-time highs. And that's exactly what happened. It went straight into what's called my deviation zone, my proprietary deviation zone 2, and it rejected, came immediately down to the range highs, the old highs, right? Bounced, came back down, bounced from them again, got caught up right at deviation zone 1 here, and now it has lost the old highs. When that happens, it is pointing way more likely, in my experience, right? I don't expect you to understand this. I'm telling you this, okay? Based on my experience, when that happens and you get something like this happen, boom, 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 and then you finally lose those old highs, that's pointing to downside more than it's pointing to upside, okay? That's just what it is, and that's my experience and what I've seen. Now, you've got your new highs, right? Your new highs are right here, and then you've got your lows. So if we were to break through here, where are we heading to? First and foremost, about 78.70. Second to that, 79.16 to about $7,900 exactly. Okay? So, but is that likely to happen? Well, you are bouncing from the 2-hour order block exactly and perfectly right now. So if you can push up through here and continue the uptrend, because remember, the S&P is in a full-on uptrend except for the 5-minute chart right here is the only one in a downtrend. And what you truly need to do is you got to break this candle or break this 5-minute high right here with a candle close on a 5-minute chart. And then everything's in an uptrend. But this is just a really quick lesson to people on what you need to make sure that you understand and watch for. When you're in a full-on trend from the 1-minute chart all the way up to the monthly charts, that trend has to reverse eventually. Whether it's uptrend or downtrend, it has to reverse eventually. You're not going to be able to stay in an uptrend forever. You're not going to be able to stay in a downtrend forever. What you can do is figure out where is the most likely reversal point. That's exactly what I use the indicators to do on these trending markets, on these at all-time high markets, things of that sort, right? We find the reversal point, and then we understand where the supports and resistances are once that reversal happens, right? And then we see if we break them. So this is your resistance, right? We know about the other two resistances up to about $7,900 up there. This is your support. And it's huge support, but it's not necessarily telling you that this is guaranteed to hold. The more times that you hit this, the less likely it is to hold. So you hit it perfectly just a second ago. I think we actually had this trade set up. Where's it at? I don't know where it is. I don't want to run through all the trades. But with this having 330,000 in cumulative long volume on it, this is a good bounce point, right? But that same bounce point could just bring you right back up to here, and then you fade. See what I'm saying? So you got to watch out what's going to happen here. As soon as you break 77.78, you are coming for these 1-hour lows at 77.40, okay? Second to that, when you break that, it gets real nasty. Let the indicators load and get their stuff on. Now, if you break this level right here, and ultimately, I mean, let's call it what it is. Let's be very, very conservative with this. If you break the daily and the 4-hour lows here at 77.24, right? So 77.24 to about 77.40, you are going to be coming down to about 76.50, period. That's just what it is. You have massive support down there, 500,000 in contract volume, 300,000 in contract volume here. This is a likely bounce point. I think we already have a trade set up down here. But even if you break that, you still got a little bit of support all the way down to 75.50. But once you break 75.50, bro, dudes and dudettes, homies and homettes, men, women, non-binary people alike, you are coming to about $7,300. It just is what it is. So you really got to uphold this right here, or at the very least, your last ditch effort is you got to uphold that right there. And really what you want to do is you want to uphold this, because once you start breaking this down, it's going to put your 1 hours all the way down to your 1-minute charts into a downtrend, which isn't going to be great, because then you're going to be heading down into this order block set, and then you're going to break the 4-hour and the daily lows. So everything from here is in a downtrend from the daily down. Okay. That's not going to be great, because this is a target for a short now instead of a target for a bounce, right? Because the markets are now in a downtrend once you break this level right here. Everything from the daily on down. All right, let's look in the chat, see what we got. All right, from the Czech Republic, does it also work for spot prices like XAU, USD? I'll just show you that really quick. It does. Works on every chart, every time frame, every asset, every day, every second, 24/7, 365, no matter what you do. It works on everything. Look at that. It literally, perfect setup. The triangle inside of the box, you caught the bottom, you're now pumping up. The triangle, front ran the top box, boom. Short, you caught the top, bang. And then all you did was wait for this to happen right here. That was it. All you did was wait for that to happen right there. Boom. Triangle inside of the box. Perfect. Bang. Massive, massive trade. I'll set the trade up for you. Let's say that your trade was here, right? And then you're setting your stop outside of the box. Very simple. You're already at a 3x risk to reward on this. You would probably and most likely be aiming for right up there. 4x risk to reward on that. Meaning, and let me like really iterate this to people. I feel like we definitely have to talk about this. Win rate does not matter. Okay, win rate does not matter. What matters is your risk to reward. Okay, I'm gonna explain to you what I mean by that. The only thing that matters in the market is math. Okay, if anybody tells you any different, they are absolutely 100% unequivocally lying to you. You need to unfollow them, never watch their content ever again. I'm not saying that you need to watch mine all the time and that I'm the end all be all, because there's a lot of really good technical analysts out here. Anybody that tells you that mathematics isn't what drives the market, that volume isn't what drives the markets, that bear flags and bull flags are what drive the markets, they're absolutely insane. You need to run the other way and learn the real mechanics that move the markets, where I've had an 82% plus win rate for like 2 straight years, live documented. There's a reason for that, and it's not because I was trading bull flags, all right? So it was because I was trading this, and then I figured out a way to automate it, and now it's even more insane. And I've done this live with hundreds of people, by the way. It's not just me saying this. Go ask everybody. Ask in the comments section. Ask them. Go to the comments section. Ask them, hey, man, is anybody taking Drew's trades? How'd they work out for you? Has anybody used Drew's indicators? Has anybody used Drew's methodology? How did it work out for you? In any case, I've digressed. Win rate doesn't matter. It's nice to have a high win rate, but all these people that are like, I have an 80% win rate. Well, what does that matter if your risk to reward is 1 to 2, right? Or 1 to 1. Okay, fine, great. Think about this. I'm going to prove this to you with math. I could have a 20% win rate and still be profitable. How? Okay. If my average trade that hits is a 10x risk to reward, and only 2 out of 10 of those work on my trades, and I have a 10 to 1 risk to reward, guess what? On the 8 that I lost 1% of my portfolio, okay? Proper position sizing and win rate, proper position sizing and risk management trumps win rate all day, every single day. If I lose 8 trades in a row and my risk to reward is 10 to 1, right? And we pick out 10 to 1 risk to rewards all day with these indicators. I just showed you 2 4x risk to rewards, just easy, that you would have gotten in 24 hours, okay? If 8 of my trades lose, I lose 8% of my portfolio. Very simple math, right? 1% times 8 is 8%. The 2 trades that won, say they were 4x risk to rewards, right? Okay, fine. I won 4%. Both of those times, 4 times 2, 8%. You are break even with a 20% win rate. Now, if your risk to reward is 10x, like I was saying, you won 20% because you won 10% 2 times, right? And you lost 8% of that because you lost 8 times. Dude, you have a 20% win rate, but somehow you added 12% to your account. That's why these boxes matter so much, man, because you can literally lose 4 in a row and still be out profitably on the 5th one when you get a 4x risk to reward, or a 6x or a 10x or a 12x risk to reward, right? Literally. And these things are all day, okay? So let's get into the comments section. Can I do RHM Rheinmetall? Is this like a metals ETF or something like that? Because this looks very similar to the gold chart. Look at that. Looks very similar. Like, okay, and here's another thing. when you're trading metals or like correlated markets and you're trading, you can use the indicators for them too. I would just very highly suggest using the indicators on them. But one thing I will say is that you don't have to actually do the TA on those to directionally understand where the market is going to go. If you know that gold and silver are going down and Rhine Metal is, holding gold and silver, then you know that their stock's probably going to go down, right? Or their ETF, whatever, their shares is going to go down. So anyways, in any case, look at that, dude. You literally caught the absolute top of this. Like, say you took 1, 2, 3 right here, and then you won on the fourth one. We literally showed you how this plays out. Then you, guess what? Again, you caught the bottom, dude. You caught the absolute bottom of this. Why? Because you saw the triangle inside of the box, man. And then guess what? It happened again. You just didn't get the triangle. You tested the box perfectly, and then you pumped up. Boom, boom, boom. Very simple. You could have taken this trade twice, right? This is obviously the higher probability setup, and it's what's pushing you all the way up to here. But let's talk about it. I mean, this is where's your where's the end of this box? Call it right here, man. Call it right here. I bet you this is still a 1-to-1, or a 2-to-1 risk to reward. Yeah, here's the end of your box. Just right there is a 2x risk to reward. If you're in it right now, you're at a 2.4x risk to reward. Look how far your stop was out too. Yeah, dude, caught the gold trade this morning, and it is absolutely printing. E. Hopkins for the win. And he's talking about the trade that we gave out probably in advance. I can actually probably show you the trade now that it has hit. This one right here, right? You got this one right here, straight into the order block, bing, bang, boom. Is it this one? Yeah. This one right down, right? And that's that, that's that. I don't think we actually locked this one in. Did I not post this? I must not have posted it. In any case, E. Hopkins, glad to see that you're killing it, man. As you can see right here, you're still going to get resistance, right? You're getting resistance right here. But as long as this asset breaks above 1246, 1247, you're flying, baby. And let's be real, that means gold is going up above 45.50 if that happens. I'll show you where your next resistance is. Let's see it. Let's see it. Damn. Your next resistance isn't for a while, dude. $1,304. That's where the daily and 12-hour highs are. We're going to have to zoom out even further to find more resistance, man. That's nuts. I mean, this thing, yeah, dude, this thing just bottomed, bro. Like, I'm going to be honest with you. This thing just bottomed right there, right? And it bottomed here again and upheld the bottom. It bottomed here, right? Like, that's pretty insane, dude. Yeah, your next resistance isn't up until about $1,400. If you get through this level right here, like, you're cooking, you're cruising, man. Obviously, watch the daily and the 12-hour highs right here at 1304. But yeah, there's nothing holding you back from getting to about 1,400 to 1,450 after that. Now, the one thing I will say, we got to zoom in and I'll show you where the support is. I would want to uphold 1123. I would want to guaranteed uphold 1123. I would actually be more comfortable if you upheld 1167. I would not want to go below 1167, but this is kind of your last ditch effort is 1121-ish, 1120, where the 1 hour lows are right here. Okay. And that's where your next order block set is to bounce from if you are to, but look at all the resist or the support you have through here. And this is where it comes down to like understanding supply and demand. When there is so much support below you and there's not a lot of resistance above you, if you're the big money, if you're the institutions and you're looking for the easy money, which one's easier money? Ripping it up or ripping it down when you know that there's a bunch of support down there? That's where they positioned, right? Of course, they're going to want to rip it up, right? So when there's very little in terms of resistance and there's a shit ton of support below you, that's where you got to take advantage, man. You got to take advantage of it because, yeah, at the end of the day, that's where you're going to be finding some serious support is right down here. First and foremost, you've got a little bit here, right? You've got a little bit here, right? And even all the way up through there, right? Massive support here, dude. Massive support. Let's look at the volume on this. Oh my God, 149,000 contracts, bro. Yeah, dude, I stick by my first assessment. As long as you uphold 1165, you're in great shape on this. This one's got 125,000 in contracts on it. Do you want to understand how much that is? 125,000 in contracts times a $1,200 asset. That is $150 million worth of institutional positioning and support here, meaning they bought $150 million worth of shares here, and they did it again right there. Let's look at these. Good God, 467,000 shares. Oh my God. That is insane. And then guess what they bought here? 500 million, $500 million in support here, bud. Yeah, I'd say you're looking pretty good. Does anybody else have anything that they want me to look at really quickly? Because we are at the hour-long mark. I don't want to keep people on here for too terribly long. But if you've got one more, I'll take one more request. Yeah, so Tax Pro Advisor says, look at SILJ. Is this another silver one, bro? Yeah, it's just the silver miners, bro. It's going to be the same as our silver analysis, most likely, but we'll do it. Lots of gaps on this chart. Lots and lots of gaps. This thing is gappy, gappy, gappy. You know, and you know about GAP, dude. GAAP, man. GAP Principles, Tax Pro Advisor. If you're an accountant, you know what I'm talking about. Yeah, I mean, this thing just does extremely well at calling tops and bottoms, man. Look at that. Straight into the order block, rejection. Straight into the order block, pump up, right? Pumped it up, boom. Yeah, I mean, ultimately, 29.17 to 28.57. You got to uphold that range right there. The only charts that are in an uptrend right now is the 1 hour, the 1 week, and the 1 month. I would like to see you breaking up above here. You got a 6 order block set here, which is unfortunate. But if you break this level, especially on a daily close basis, bro, everything aligns for a 100% uptrend. This is your line in the sand right here. I got to present this. This is your line in the sand right here. This line, okay? You got to uphold this, in my opinion. You got to uphold this right here to stay bullish, okay? And as you can see, it already did that. It rejected from this order block set already, right? All you got to do is get through here. All you got to do is get through here. Daily closing candle basis. You got to close a daily candle above $31.03, okay? And then you are aligning every single chart from the monthly down to the 1 minute in an uptrend. Because as it sits, most of them are in downtrends right now. Now, we need to see what the type of volume is here. 413,000 contracts. It's going to take a second to bang that down, right? But it's not as bad as the other one. Why? Because this is a $20, $30 asset. Let's just say 420,000 contracts times 30 bucks. It's only 12.5 in volume. I don't think it's going to be that big of a resistance. I don't know what the volume is that usually trades on this. If that's big volume or if it's not. I mean, you got massive support here, 610, 252, 233. Yeah, I mean, that's significant volume, but it seems like it's relative, it's bigger volume than most of the time. So your massive resistance is going to be right here at the 1 hour to the 1 daily highs. And then your massive support is going to be right here at 26 bucks. You lose 26, you're probably coming down for these daily 12-hour, 4-hour lows. And you're probably, if you lose this level, you're going to be able to move through these two much quicker, at least in my opinion, right? Now, yeah, that's kind of what I'm seeing, at least on SILJ. You got to watch, like, when you're looking at correlated markets, a lot of times, I'm just going to be honest with you, it's better to watch the actual assets themselves, like silver or like gold, because it's going to tell you, granted, if you have the indicators, which in my opinion, everybody should have the indicators if they want to follow my analysis, if they want to follow my trades, if they want to understand the markets and stop following gurus that are actually dummies that don't know anything, should have the indicators. you can do both dual analysis, right? You can look at SILJ and you can say, here's where I know my resistance is. But then you go and you look at silver and you're like, okay, is it likely that I'm going to be able to break down this resistance, right? Let me show you. Is it likely that I'm going to be able to break down this resistance right here if I compare it to where silver's at? And the answer on silver right now is yes. Okay, why? Because silver's next big resistance is up here at $69, okay? And you got to let the indicators load. Look at that. That's a massive move on silver. Like you're moving up about 6% before you get to 4.5%. Call it 4.5%. Call it 4%. You're moving up. Now, if you correlate that to this chart, right, and you look for that same 4.5% move, guess what? 4% move takes you right there. Boom. And you get through it barely, right? So that's all I'm saying. Like you don't have to, you correlate the charts, man. Look at both. Understand you got to look at both because you have to understand with silver, it's at $66.50, whereas that other asset is at $30 and it's an ETF based on the price of silver or holdings of silver. And you got to understand that it's half of the price. So the same move happens inside of silver is actually less significant than the same dollar amount move happening inside of that ETF that's only $30, which is half of the price of what silver is. So by correlating those charts and looking at them side by side with the full institutional picture and footprint, dude, you are prepared to make a decision, period, right? So yeah, check them out, man. It's the first link in the description. Again, guys, I don't want anybody to believe me on this. I want you to see it for yourself. That's why I am okay with giving them away for $7 for 7 days, because I know nobody's going to leave after they get them on their charts. Once you get them on your charts and you see all of the strategies that I give you inside of your customer dashboard as soon as you come in and you see exactly what I see on my charts and you're looking at the markets in 4 or even 5D and understanding what these strategies do whenever you actually implement them and you get your first win based off of it, bro, I promise you, none of you are going to go back to the old way again. And you're going to laugh at everybody that's telling you about bull flags, bear flags, trend lines, SMAs, EMAs, and stuff like that, because you're going to be like, dude, there's one moving average that actually matters. It's VWAP. It's not moving averages, SMAs, EMAs. None of those matter. It's all about VWAP. And we actually have a VWAP indicator, which is kind of funny that I brought that up. I'm just going to do this really quickly and show you. We do have a VWAP indicator and a volume profile indicator that is like 20 times better than any volume profile indicator and VWAP indicator that you've ever had in your life, because it brings up the naked institutional levels that actually matter. And I'm going to pull these off. You'll see. So right here, you've got your pending daily VWAP and your pending weekly VWAP. So we are above VWAP substantially right now on silver. Like, I mean, we're like $1 above it, right? And that's on a weekly and a daily basis, right? 65.84. Okay. Now, what you also want to see is where are those naked levels at? Got to zoom out, let it happen. How do you get one of the t-shirts? They're exclusive for now. Hold on one second. Let me show you something. Naked weekly POC. Naked weekly VWAP here, right? And look at where those support lines are, right where support is. And I bet you, watch this. Let's pull up those order blocks. I'm going to circle this. Look at where that is. It's right at the bottom end of the order blocks. Dude. All of this gets used in conjunction with each other to be like an absolutely incredibly, ridiculously good system. Like, I built this over 10 years. I'm going to be honest with you. This isn't something I invented in my garage 2 days ago. Like, I've literally been in the markets for over 10 years. I figured out what works. I figured out how to automate it. Maybe one day I will offer the shirts, the t-shirts, but I got it. Like, I've done that before and like nobody bought. any of it. I've done it with 2 different companies that I ran, and everybody was like, oh, I want merch. And then I took an entire day to create the merch, and then nobody bought it. Like 5 people bought it, and I was just like, oh, that was such a waste of time. But I might offer them in the future. Now, in any case, here's my challenge to everybody. Don't believe me. I don't want you to believe me. Write down the levels that I was talking about on gold, silver, Bitcoin, the S&P, NASDAQ. Follow the analysis, watch the trades, watch the levels that I was talking about, and see what happens at those levels. I gave you a lot of different ones, right? Like we did it on a plethora of markets. Fact check me. And then you'll know if I'm the real deal. If you've been here for long enough, you probably already know and you've made up your mind and decision. But I encourage you, before you take any action, right, on like taking a trade there or whatever, just watch. It'll only take like a day or 2 for you to just watch, right? Dude, just watch. And I promise you, you'll see. You'll see. I don't want people to believe me because I wouldn't believe me either. I would want to see it. Proof by verification. Verify it first. Do the indicators come with training? Yeah. Very extensive training too. So I'll touch on it really quick and then we'll sign off of here. You go to the indicators website and you subscribe to the indicators. First off, you're only paying $7 for the first 7 days, okay? Try them out, get them on your chart. As soon as you subscribe, you get a welcome email that tells you, hey man, here's exactly how you get these indicators on your chart. First thing you gotta do, you gotta add your TradingView username to your dashboard. It's very simple, and we even give you a tutorial video on where to find that, how to do that. Second to that, you receive an email within 30 seconds of signing up, right, and purchasing the indicators for $7 for the first 7 days. You receive an email that tells you exactly what you need to know. How do you log into your dashboard? But you'll already automatically be logged into your dashboard as soon as you come in. And then it'll show you exactly how to get the indicators on your chart. Then you'll get a second email within 5 minutes of signing up. And it'll say, hey, by the way, man, dude, dudette, homie, homette, whoever, man, woman, non-binary person, dog, cat, chicken, duck, frog, whatever you identify as. He'll say, hey, go into your dashboard and look at this. It's literally going to say, let's get you profitable. And it's going to have a tutorial, or it's going to have a strategy video that shows you like one of the best strategies, in my opinion, the best strategy. And then there's going to be 4 more under that has like 4 other full strategies. And they're all like, I don't know, 10 minutes a piece or something like that. Maybe it's a 15-minute video because I'm walking you through live charts. As E. Hopkins said, man, the indicators are well worth it. Don't take my word for it. Don't take his word for it. Try them out. It's $7. It's less than your day coffee. And then as soon as you get into your dashboard, you'll see those 5 trainings that show you, hey, here's the best strategies, right? But to answer your question, Tax Pro Advisor, you also get an individual training on every single indicator, exactly what it's telling you, the data that it's interpreting and showing you on your chart automatically, and how you are supposed to interpret that data and how to use that exact indicator, right? And then there's an entire video on how to use all of the indicators combined, right? So you've got like 5 more training videos on top of that. These are like 4 or 5 minute videos. It's not extensive. Like it's extensive training, but it's not like burdensome for you to watch. And then you have full tutorial videos on every single indicator. It's like a 25, 30-minute video that goes in depth on every single setting that is inside of the indicator that you can edit and do whatever you want with, because these things are fully customizable. You don't have to make your charts blue and pink and white and stuff. You can make them green and red and yellow if you want to. You can make the indicators look however you want, and you don't have to have all the information that I have on my chart. You can toggle on anything that you want, toggle anything that you want off, right? And those tutorial videos are going to show you exactly how to do that. But the indicators work. flawlessly right out of the box, dude. Those are the settings that I recommend. If people want to mess with them, I'm not going to stand in their way. I'm not going to force you to use them how I use them. You customize them however you want them, man. Whatever makes the most sense for you. That's what a real trader would do, because they understand that other traders, they have their own methods. They have their own ways of looking at things. They don't want some cookie cutter bullshit that's like, oh, you can only use it in this way. No, use it in the way. I'm going to give you the best way that I see that it's to be used. But if you want to change it, you want to make it look different, or you want to do a setting and make something pop down or pop up on the chart, you can do that. So hopefully that kind of helps you kind of understand the indicators a little bit better. And hopefully that wasn't too boring for people. But in any case, I think we all know and are very prepared for what's going to happen in the week inside of gold, inside of silver, inside of the S&P, inside of Bitcoin and crypto, inside of the NASDAQ, right? So if that's helpful to you, let me know in the comments section. But also what I want you to do is any assets that you want to see, right? Like very similar to what Tax Pro Advisor did, very similar to what Matoush did, and I think it was Nemus and Cornell. Dude, drop them in the comments section. Like, throw me for a loop. Give me something that you think the indicators aren't going to work on, and then I'm going to show you the indicators working on those charts and the methodology working. And then you can go and check it out for yourself, and you can automate this thing, man. So with that being said, man, I appreciate everybody seriously so much for showing up every single day. We're going to continue doing these streams. It seems like people are enjoying them. We've got almost 24 people on the stream across all platforms. Again, this is going out on 3 different YouTubes. My YouTube, the Alpha Intelligence YouTube, my secondary YouTube. Nobody's on those 2. But then the Drew Wolfer Twitter and the Alpha Intelligence Twitter, it's going out across that too. And we've got almost 24 people on it. So, man, seriously, much love to you all. Thank you for showing love. If you have any questions, man, drop them in the comments section, drop them on the Twitter post, whatever. Get inside of our free Discord too. You can get inside of the Alpha Intelligence Discord. It's 100% free. Just go in there. You can ask questions. All you got to do is get in there, and, you know, more than happy to answer anybody's questions directly from the horse's mouth, man. By the way, these indicators were not invented by a developer. I coded these 100% myself based on my methodology, based on the mathematical calculations and the quantitative data and analytics that we needed in order to do it. Nobody else has these as it sits right now. I mean, obviously, like the people that subscribe to it do, but you are very early with this, okay? You are very early with this if you're seeing these. So, man, if you become an expert in these, it's going to do great things for you. I will see you all soon. I appreciate you. Have a good day. Peace.